Hello and welcome. My name is Oscar from the Finance Society at Stockholm Business School. Today we're going to talk about consolidation in the technical analysis. So what is consolidation? First off, we have both bullish consolidation and bearish consolidation. Bullish being when the trend is bullish, that means upwards, and bearish if it's downwards and descending. Yes. I would call consolidation a main topic for this continuing pattern. The trend has already shifted from being bearish to bullish, and this consolidation will, in this case, continue the trend. So I would put consolidation as a main topic, and then you just have subsections like flags and triangles and other consolidating patterns underneath consolidation. Because there are loads of interesting patterns you can look at. But what is consolidation? Consolidation is when a price of a stock is hovering around the same area over a period of time. So let's say this area. Here's trading in a range of $1.50-ish over a month time, and that's a pretty tight range. And as we can see here, this green line is the 200 moving average, so we can't get through the 200. We have fallen from up here down here when we're consolidating at the 200 moving average. So that is what consolidation is. So when is consolidation good and when is consolidation bad? Well, of course, it depends on what kind of trade you're in or that you want to take. In this case, let's just clean this up. Delete, and there we go. If you see this as a big fall, this is the top, and you see, okay, we fall straight into this 200 moving average. That would be a good trade to buy at the 200 and try and sell when it retraces up. So this would be a good trade because it's the first hit of a big resistance point. But let's say that you take the trade here, and you go up, and you go down, you hit it again. You go up, you hit it again, you go up, you hit it again. After I would say the second hit, you should be very nervous because now it's consolidating at the support, which makes the support weaker, and it will eventually break. So what you get here is, I will confuse you now, or I may confuse you. Because I will describe this, how you can look at the pattern as a flag. So this would be the flag pole. Oh, sorry again. There, this would be the flag pole, and then you have the area or the range as the flag. So this would be the flag, and this would be the flag pole. Why this may confuse you is because there actually is a pattern called the flag pattern that I'm thinking of doing next week. So this is just to give you a picture of what to look at: a big downward moves and a sideways move, or like here, a big upward move or an upward move and a sideways move, slightly down, again a flag. So that is what consolidation is. And again, depends on what kind of trade you want to do. If you want to continue, consolidation is good for you. If you just want a quick bounce, consolidation is not your friend. So you need to know when to use consolidation as your friend and when to avoid it, because it just weakens your support level or resistance. Yes. Okay. What usually happens is that, like here, the stock falls and hits support, goes sideways until another factor comes and pushing it down. In this case, this blue line, the 20 moving average, hits the price. It actually goes through the price, but it's not really that important, as long as you have the stop out level somewhere in the vicinity. And as we can see, the 20 moving average pushing the price down through the 200, and then it's free fall. Same thing over here at the left. We go up, we consolidate sideways, and I think actually we hit the line here, but we're very close to the line, and the 20 helps the price of the stock up. So we go up, sideways, till we got another factor that will help us in the right direction. In this case, it's up. Here it's down. So I thought we were gonna look at a couple of charts. This is ExxonMobil. So big downwards move, sideways, till the 20 hits, and it's pushing us down through the support level, and then just continues trending down. So a good trade would be here at taking the short in this case, somewhere in this flag, somewhere in this vicinity, because you need the flag to be able to form, so you wouldn't short it up right here in the beginning. I would want to short it as close to the 20 as possible, but that might not always be the case. Like here, you might have missed it. So, but in the vicinity of the 20 would be the greatest trade. And we were gonna look at Monsanto, and here we have a flag. I mean a consolidation, big upward moves, sideways pattern. And again, we move from 105 up to 115, where we hit again the 200 moving average, this green line. And we go sideways until the 20. In this case, it might be hard to call because it's a bit away from the actual price action, but the 20 comes up and helps us go through the 200, and we're off. Might not be the very best example, but you get the gist. We go up, we go sideways, we wait for the 20 to go up and help us up. And now we're gonna look at yet again. Same thing here. Big upward moves, sideways, and again we find the 20 and we go up. This is not a big move. And this would be a good consolidation and not a flag. Again, this is a consolidation move, or a consolidation setup, I should say, and not a flag. So right up, sideways, wait for the 20, or some other factor that you think is very important in this case. I like the 20, but that's a matter of taste. And the 20 comes up and pushes you up. Of course, this is not foolproof. As I will show you, flagpole, and the flag itself. We see here we go through 200, we consolidate at the 200. The 200 is now weak, and the 20 comes up. The 20 continues, but price can't push through the 200. The 200 is a redundant resistant level at this point because we have just been all over it for so long. But as anything in life, I guess, nothing is foolproof. And in this case, the consolidation pattern failed. So you would maybe get in here at 23, and you would maybe already here you would be worried because you wouldn't push up with the 20, but maybe you just assume that the consolidation was a bit longer, but then you would definitely stop here stop out at 25. But from 23 to 25, that's 8%, and that's a pretty big loss in just a month time. So again, just to show you that nothing's foolproof, doesn't always work. But this would have been a good trade. Taking it here, getting antsy here. This is, by the way, a big sign. This topping tail or doji. That's another video, but this is a warning that this will not work out. Just noticed. So you would get in here and out here. So it's not always that it works, but it's a good setup that you can look for, and you can predict or make a qualified guess, I should say, the direction of the market. So look for the consolidation with my case, the 20 sloping up into price and giving it a blast off. That was all from me. Have a good week, and speak to you next week again. Have a good one.